I think crypto will be the 12th sector of the economy within 10 years because it adds so much liquidity, so much productivity, so much transparency, so much auditability. It's so much better than what we're doing right now, which is so expensive and so slow. If I want to transfer capital over to Zurich to buy Nestle stock in Swiss francs, it takes me days and it costs me a fortune and it's incredibly inefficient. I could do it in 2 seconds with a stable coin, and I can't yet because we don't have policy on both sides of the ocean that let me do that, but it's coming one day. And I think crypto and blockchain and the services and financial transactions, microtransactions, all of it are going to lend itself to this blockchain auditability, transparency, the ledger system. It all makes sense to me, and I think regulators are starting to figure that out. Now, as an investor, I don't know which of these chains is going to win. And all of these different ideas out there, so my strategy is to do the same thing I do with stocks, get diversification. I own 32 positions, 32 chain projects, 32 different coins and tokens. I have no idea which ones will win over the next 5 years, but I don't need them all to win. I just need a few to win, and that's what diversification is all about. And I've made some investments in the infrastructure. You know that old adage in the gold rush, you were better owning and selling picks and shovels and jeans than you were trying to find gold, because that was very hard to do. The infrastructure of crypto are companies like FTX, I'm a shareholder, Circle, I'm a shareholder, WonderFi, I'm a shareholder, Immutable Holdings, I'm a shareholder. I've given money to all of these projects because they make a lot of sense to me and I use them all. And they're centralized, decentralized. There's stablecoins in there. There's the FTX platform, which is the first compliant institutional platform I can find that my auditors and my compliance department finally agree to let me use to store value. And those are the kind of things that really matter to me. And I have to disclose, yes, I'm a shareholder in FTX. I'm also a paid spokesperson. So I'm eating my own cooking, but I'm also talking about the merits of their compliance platform.
Kevin O'Leary has gone big into crypto and is laser focused on one thing: policy. O'Leary believes that the one catalyst that is going to open the floodgates of pension and sovereign wealth fund capital into the crypto space is going to be policy surrounding crypto projects, specifically stablecoins. In his most recent interview, O'Leary breaks down why he is so bullish on the space because of its increased efficiency and speed compared to the legacy financial system, also how he is personally approaching how to invest in such an early space. Make sure to stick around to the end of the video where O'Leary breaks down his personal crypto portfolio and also why he thinks diversification is key to maximizing returns. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
For all of the people in the crypto universe, and there are many, that don't think we need regulation, let me point something out that would get everybody on board. It's a very simple quantum mathematics, and here's how it works. The majority of invested capital on Earth is held by sovereign and pension plans, about 90+% of it. They own zero crypto, nothing. And so for all the excitement about Bitcoin, 800 billion, that is absolutely a giant nothing burger. It is totally irrelevant. It's not held by any institutions that matter. Now, I'm an indexer, and I've talked about this many, many times. There's many indexers in the world, but we service sovereign funds, pension plans. Let's say you're an oil-rich country in the Middle East. You're making 250 million cash a day, US dollars, in oil revenues. You don't want to reinvest in oil. You want to invest in every other sector. So they'll go to an indexer like me and say, index the S&P 500, less energy, less airlines. That's the kind of index we do. So we see these fund flows, trillions of dollars of fund flows every year just going through the system. Indexers see that every 24 hours. And I always ask these institutions and these sovereign funds, what allocation would you put into Bitcoin? Just one. Bitcoin, which is the granddaddy digital asset, everybody knows that. What would you allocate if you could? And they said, well, we can't because our compliance department won't allow it, because the SEC hasn't ruled on it yet, and Larry Fink doesn't like it, and he's our biggest money manager, and all those other reasons, but they would allocate 50 to 100 basis points. Now, when you're running a $1 trillion mandate or an $800 billion mandate, which is some of the size of these funds, that's a ton of money. And that's a huge amount of demand that would come into the market. And as Bitcoin prices went past that 1% allocation, let's say, they'd sell it back down to 1%. But just importantly, if it dropped below 1%, they'd buy it back up. So there'd be an eternal bid forever. The volatility would drop dramatically. There'd be price appreciation in Bitcoin. It would be good for everybody involved in crypto. But we can't do it without policy. And so everybody should just get off this let's be rogue, let's be crypto cowboys. Forget all that crap. It's time to get this real and get a tremendous amount of capital going into crypto because it's policy and it gets regulated and it's good for everybody. Education. This is the most misunderstood sector of the economy that's ever existed because of the complexity of how it works. Basically, policymakers do not understand it, and when you don't understand something, you tend to mistrust it. It requires education. It's taken me years and a lot of hours of reading and a tremendous amount of travel to get to the place where I'm comfortable making these investments now and understand how this works. But that's not easy to do. And the whole idea of a centralized and decentralized wallet, very many people don't understand the differences between it. And yet you need both in the crypto environment. You really want both. And one of the biggest investment theses I have about investing in WonderFi was it gave me both. There's a decentralized wallet, there's a centralized wallet. And I don't want to lose those customers. If all of a sudden you started by setting yourself up on BitBuy, which is the Canadian regulated centralized wallet, and all of a sudden you decided you want to have a decentralized wallet with your NFTs in it, I don't want to lose you as a customer. I spent hundreds of dollars acquiring you. I want to offer both with a know your customer platform that provides the compliance. And that's what they're building up there in Canada. And that software itself and all the millions of dollars of development they're doing is going to be cookie cutter for other markets, like potentially the Middle East or South America or Switzerland or England. That's the whole idea of being part of these things and pushing these projects forward. But it's education that's holding everybody back. We've got to simplify this stuff. Most people, the first time that try and set up a decentralized wallet on, let's say, MetaMask, lose their money because they don't know about security of the passphrase. And that's an important lesson to learn. And that's why I tell people, start with $200. Don't go crazy. Figure this stuff out slowly. Learn about security. Learn about password protocols. Learn about centralized versus decentralized. Check it out slowly. Baby steps into it. Then you can put up real money. Because the first thing that happens when you take a new asset class and you call up your auditor or your regulator or your compliance department and say, look, I want to transfer 5% of our cash into USDC. They say, what? Where's the compliance infrastructure that marks to market that at 4 o'clock when the market ends? I said, there is no market end for crypto. There's no beginning, there's no end. It's just trading 24/7. And there's no infrastructure. And that is very uncomfortable when your compliance department is used to just looking at your mark-to-market positions at 4:01 and saying, hey, that position is a 6% weighting. It's got to get sold down to 5 tomorrow morning, or you put too much leverage on that position. That's how the world works. We don't have the infrastructure yet. And so I tell people, look, start slowly. Now, for me, USDC has become a very powerful payment system. And more time is going by and vendors are willing to take it. I'm willing to take it. When people want to pay me for goods and services in other countries, I say, give me USDC if you're allowed to. Don't ACH me any capital out of a bank. Don't send me Swiss francs, euros, or British pounds. That's just a total headache for me. Go figure out USDC and I'll take the risk myself on it. But that's going to take a long time to happen. I tell everybody this is the future of currency. It's the future of payment systems. It's the 12th sector of the economy. Get over it and start learning about it. Before the pandemic, if you were 65 years old sitting in a condo in Miami Beach and you never used your phone to order groceries, well, now you do, because otherwise you would have starved to death. You couldn't go to the grocery store. You figured out how to download one of those apps and start ordering food. And now you're totally hip to it. And you live your life on your phone. And that was because you had to. The same thing's going to happen in cryptocurrencies. I'm going to lay it out the way I see it and the way I'm investing, all right? What's going to happen is nothing before the midterms, but we're getting close. After the midterms, when the House is settled, and who knows what it'll look like, but I have a pretty good idea, we're going to get some policy. And the first policy, in my opinion, personal opinion here, is going to be around stablecoins. And here's what it's going to look like. It's going to be an open competitive market, just like you can find a money market at Schwab or a money market at Fidelity or a money market at some other financial institution. They're slightly different. Stablecoins are payment systems, but they're also stores of value if you're willing to stake them out. You can make 4.5% on an annualized basis on a 30-day contract today, right now, on USDC and other stablecoins. But here's the policy I see coming. It's going to look like this. 30-day audit on the assets underneath it. You can bring any kind of stablecoin you want, but there's going to be a 30-day audit and what's in there. no assets supporting the token or coin with a duration more than 12 months. So if you're going to use T-bills, they got to be short duration, probably average of 6 months duration. And that's very much like a money market is run and completely FDIC insured. There may even be one or two of these stablecoin operators that apply to become a bank and become FDIC insured, in which case they would get trillions of dollars. And the reason this is going to happen first, why the stablecoin market will happen first with policymakers here in Washington, is that it perpetuates the US dollar as the default currency of the globe. When we get that worked out, the US dollar becomes king dollar in perpetuity. Even other countries, even other sovereigns are willing to bring tokens out backed by the US dollar because they know in terms of attracting people to use them and store them and save them, they got to have the king dollar. And this is why policymakers should get off their you-know-whats and get this thing done, because we don't want the Chinese doing that with the yuan. I would never buy the Chinese yuan as a stable coin. Why? Because I know they're watching it. I don't want them watching my dollars. And I don't trust that currency. I trust the US dollar. So I wouldn't like to find out the Swiss franc did that before us. We got to get this thing done and make the US dollar king dollar all around the world. Everybody will be happy with a product that is backed by the US dollar one-to-one, is liquid, transparent, you can transfer immediately with a full ledger. Then we'll get policy on Bitcoin. Then we'll get policy on other chains, okay? We'll start to debate, is Solana a commodity or Solana a security? What about the NFTs? One by one, we'll knock these puppies down. And that's the way it should be. But we don't want to try and solve everything all at once. We'll never get it done. We'll never get it done. One thing at a time. Let's start with stablecoins. I think crypto will be the 12th sector of the economy in 10 years. I'm going to treat it that way now in the operating company. That means I can put up to 20% of our operating capital into the crypto space, and then I want diversification. So I've basically done exactly that. My largest holdings right now are Ethereum and Bitcoin. That's not a big surprise, but I also have a big position in USDC, big position in FTX as an equity, which is a private company, and then on down, Polygon, Solana, I'm a big fan, in the proportions of diversification. Now that portfolio, I'd say about 8 weeks ago, was at 21%. Now it's down at about 18%. There's been a big correction in the market, but you've got to hold your nose and get used to the volatility. And it lets me adjust positions. I can add a little bit to my USDC. My compliance department doesn't consider USDC a money market or a proxy for cash. They consider it a highly volatile equity. That's because of what's been going on in stablecoins. So I'm limited to a 5% weighting there, and I'm trying to get some policy while I'm here in Washington. Remember, we go right back to that. Give me one thing, just give me policy on stablecoins and let the market compete. And I could put a lot more into that space because I've got a lot of cash on my operating company balance. And inflation is 6, 7, 8%, and I'm getting 45 basis points in a bank. That's really crazy. I could do a lot more with stablecoins.